This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged higher on Wednesday amid oil supply disruptions in the US and Russia and as markets awaited clarity on the Ukraine peace talks. Brent crude futures gained 20 cents, or 0.3% at $76.04 a barrel at 0146 GMT, climbing for a third day. U.S. West Texas Intermediate crude futures for March rose 23 cents, or 0.3%, to $72.08 a barrel, up 1.7% from the close on Friday after not settling on Monday because of the President's Day public holiday. The March contract expires on Thursday and the more active April contract gained 0.3% to $72.04.
Saudi Arabia's monthly crude oil exports fell 1% in December, data from the Joint Organization's Data Initiative showed on Tuesday. Crude exports from the world's largest exporter in December fell 1% to 6.146 million barrels per day, BPD, from 6.206 million barrels of oil per day in November. Saudi production fell to its lowest since June 2024 at 8.905 million barrels of oil per day, down from 8.925 million barrels of oil per day in November.
Moving on to the top news in the energy sector.
China invested 6.8 trillion yuan, $940 billion, in clean energy in 2024, approaching the $1.12 trillion in global investment in fossil fuels, according to a new analysis for UK-based research organisation Carbon Brief. That was despite growth in China's clean energy investments slowing to 7% from 40% in 2023 amid overcapacity. More than half of that investment came from China's burgeoning electric vehicle, battery and solar industries. The sector's contribution to China's GDP grew to 10% in 2024, up from 9% in 2023, according to the Carbon Brief research, which was conducted by analysts at the Helsinki-based Center for Research on Energy and Clean Air.
India's oil imports from the United States rose sharply in January from December, turning Washington as the fifth largest oil supplier to New Delhi, data obtained from trade sources show. India shipped in 218,400 barrels per day of oil from the U.S. compared to 70,600 barrels of oil per day in December, the data showed. Refiners in India, the world's third biggest oil importer and consumer, are bracing for higher imports of energy from Washington, as New Delhi looks to boost its energy purchases from the U.S. to $25 billion from $15 billion last year. India's imports from its top oil supplier Russia rose 4.3% last month to 1.58 million barrels per day, per data. Next, we have the top news in metal. A Chinese company has stopped exporting a piece of equipment used to process the electric vehicle battery metal lithium, in the clearest sign yet manufacturers are already implementing export controls proposed by Beijing. Jiangsu Jiwu High-Tech told customers last month it would stop exporting a piece of filtration equipment known as a sorbent from February 1, according to a source with direct knowledge of the matter and documents seen by Reuters. China is the world's largest producer of sorbents, used to extract lithium from brines or other solutions containing the battery metal, although its market size can be difficult to ascertain given Beijing's reticence to share data, analysts say.
Concerns about sliding supplies from major producer Indonesia and declining stocks in warehouses registered with the London Metal Exchange, LME, drove prices of soldering metal tin to 4-month highs on Tuesday. Benchmark tin on the LME was last up 0.5% at $32,850 a metric ton after hitting $33,065, its highest since October 14 and a gain of 14% so far this year. Prices of the metal, used to make semiconductors, have outperformed others traded on the LME after Indonesia's January refined tin exports dropped 67% to 1,566 tons from December.
We will now look at the top news in the agricultural sector.
Chicago corn futures inched higher on Wednesday and were just off the previous day's 16-month high of more than $5 a bushel, with strong U.S. export demand, falling inventories and fund buying supporting prices. Wheat futures gained and were near their highest level since October 2024 amid concerns that cold weather in Russia and the US could damage crops and curtail supply. Soybeans edged lower as traders braced for a deluge of supply from Brazil's ongoing harvest.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.